health, money, wisdom, and happiness. We share the best ideas that make your life simple and easy. Artificial intelligence has come, and with it, a massive transformation of the job market. Many existing jobs are likely to be replaced or significantly changed by AI in the coming years. The job market of the future will be far more challenging than it is today. So, how can you best prepare your kids for the rapid changes ahead? The best strategy is to start investing for them early, helping them build financial security while they're young. By doing so, you equip them with a valuable resource they can use to navigate life's challenges, build a solid lifestyle, and make smart financial decisions as they grow older. 1. Why start investing for your kids? Investing in your child's future is more than just putting money away. It's about giving them a head start. As the economy evolves, it will become harder to predict the job market, meaning financial security will play a bigger role in their overall well-being. By helping your kids start saving and investing now, you're giving them a safety net for future expenses like education, buying a home, or starting a business. And the earlier you start, the better. This is because of the power of compound interest, which can significantly multiply their savings over time. 2. Why choose the stock market? While investing in real estate often requires large sums of money upfront, the stock market is more accessible and ideal for smaller, regular contributions. Many people are hesitant about investing for their kids because they assume it's complicated. But the truth is that stock investments can be easy and predictable when approached correctly. One of the simplest ways to get started is by investing in an ETF, or exchange-traded fund, that tracks the S&P 500 index. The S&P 500 is made up of the 500 largest companies in the US, and it consistently outperforms many other indices worldwide. In fact, the S&P 500 surpasses more than 90% of active fund managers. The reason the S&P 500 is such a good long-term investment is that it's regularly updated. Good stocks are added and bad stocks are removed. So, when you invest in it, you're automatically investing in the best performing companies. 3. How to invest in the S&P 500 for your kids. The key to successful investing is consistency and patience. Start by depositing a fixed amount into an S&P 500 ETF every month and ensure dividends are automatically reinvested. Over time, this investment will grow substantially thanks to the power of compounding. For example, during bear markets, the S&P 500 can drop by up to 50%. But historically, it always recovers and rises by at least 100% during the following bull market. By staying invested for at least 30 years, you're almost guaranteed to experience multiple bull markets, leading to significant returns. For your kids, the longer investment horizon they have means their returns will be even higher than yours. Imagine investing $500 a month starting at birth. By the time your child is 30, their account could be worth more than $1 million. By 40, it could exceed $3 million. And by 60, it might surpass $20 million. This is the magic of compound returns. Money invested today can grow exponentially over time. 4. Where to invest? To maximize the benefits of your investment, consider placing it in a tax-free account. When your kids withdraw the money years later, they won't have to pay taxes on it, allowing them to enjoy the full amount. In the US, the best account for this is the Roth IRA. There's no minimum age for contributing to a Roth IRA, so you can start investing for your kids immediately. In Canada, the equivalent is the Tax-Free Savings Account, or TFSA, which becomes available once your child turns 18. 5. What if you don't have extra money to invest consistently? While the S&P 500 strategy is one of the best long-term investment options, not everyone has the means to contribute regularly. If this is your situation, another approach is to focus on high-return opportunities that arise each year. With the right knowledge and research, you can achieve higher returns than the general market. However, this approach requires more effort. You'll need to educate yourself on macro analysis, understanding the economy, monetary policy, interest rates, inflation, and employment trends can help you determine when it's a good time to invest. Fundamental analysis. This is about understanding a company's strategy, financial health, leadership, competitors, and market position. Knowing how to analyze a company's fundamentals gives you an edge in selecting winning stocks. Technical analysis. Here, you'll study price charts, patterns, and trends to predict future price movements. Technical analysis can help you identify whether a stock is trending or oscillating and guide you on when to buy or sell. Cycle analysis. Markets follow cycles of growth and contraction. Learning to spot these cycles helps you time your investments effectively. 6. Investment strategies to learn. Let's dive deeper into some essential investment concepts that can help you make better decisions for your child's future. PEG ratio, the price-earnings to growth ratio, or PEG helps determine whether a stock is priced fairly based on its growth potential. A PEG ratio of less than 1 indicates that the stock may be undervalued and could be a smart buy. Intrinsic value. This refers to the true value of a stock, which may differ from its market price. When a stock is trading below its intrinsic value, it could be a great investment opportunity. Margin of safety. This is the difference between a stock's intrinsic value and its market price. A wider margin of safety reduces your risk when investing. Relative strength. This momentum investing strategy involves buying stocks that are outperforming the market. A stock with higher relative strength is usually a market leader and may offer significant returns. Fear and greed index. This tool measures investor sentiment. Extreme fear often signals a buying opportunity, while extreme greed may indicate an overheated market. Max pain. The max pain price is where most open options contracts exist, and it's often the price where financial losses are highest for options holders. Understanding max pain can give you insights into market maker behavior. Accumulation distribution. Indicator. This metric shows whether a stock is being bought, accumulated, or sold, distributed. It helps identify whether a stock's price trend is likely to continue. 7. Getting help from professionals. Even if you learn the basics, investing can be complex. For this reason, many people choose to consult financial professionals or use platforms that guide them towards smart investments. If you want to accelerate your financial growth, consider joining a paid membership that offers professional guidance on achieving better returns with lower risks. These platforms often recommend the best trading opportunities each year, allowing you to make more informed decisions. But remember, only allocate a small portion of your total investment, around 20%, to riskier, high-return opportunities. The majority of your investment should remain in stable index funds like the S&P 500. 8. Building a future for your kids. When you invest for your children, you're giving them a powerful tool for future success. Starting early means they'll have decades for their investments to grow, giving them the financial flexibility to pursue their dreams, whether that means going to college, buying a house, starting a business, or enjoying early retirement. By taking these steps today, you're providing them with something more valuable than money. You're giving them the confidence and security they'll need to face life's challenges. Investing for your kids is one of the smartest financial moves you can make to secure their future. Whether you choose to invest regularly in the S&P 500 or explore high-return opportunities, the key is to start early, stay consistent, and remain patient. The Blue Eden Project is dedicated to helping you find the best strategies for living a better life, whether that's through health, wealth, wisdom, or happiness. We've built the Tree of Life, a platform that integrates great ideas on how to live well. Visit the Tree of Life, watch our videos, and share your insights. Join the Blue Eden Project to achieve a better life for yourself and your family and contribute to building a better world.